Yo, shake my hand, and welcome to another Traders War Room. We are on War Room 93, right? War Room 93. This is off the back of Fed rate funds remaining unchanged. Then we had an FOMC, a few days ago, FOMC press conference, which I need to talk to you guys about. We had the summary of economic projections, the dot plan, which we're not going to do today because, Powell did say like 3 times, it's just a projection this time, number one. Number two, members of the FOMC generally don't go back and revise their numbers. But yeah, dot plan did happen. It's quite a big deal. And then with PPI, straight after that, a few days later. So a couple of things to talk about in War Room 93. But before I even move forward, I'm recording this on Sunday, the 16th of June. And I want to say happy Father's Day. Shake my hand to all the fathers out there. Well done, dads. Keep doing what you're doing. Keep showing up, where and when it matters, which is all the time. And as 365 for Father's Day, we're going to be giving, 50% off to the course that's right in front of you. This is pretty much what it looks like. If you're enrolled as a student, this is just the student's dashboard. Every single lecture, all my classes, my entire strategy stripped into steps around supply and demand, how I understand the markets, how I was able to call, CPI, perfect trades this past week in the Telegram group. It's all here. If you just master this stuff, everything else begins to flow. So this is my module 1 and my module 2. This is module 2. So if you are a father, and I won't have time to check if it's just fathers are logging in. So for everyone, because it's Father's Day, the 365 course is going to be 50% off until the end of June. Today is the 16th of June. So until the end of June, instead of paying $300 to gain full access to all things institutional supply and demand trading, it'll be $150 for those of you who want it. No pressure. It's there whenever you're ready. But this is just all my lecture recordings in a very specific order so you understand my strategy. I'm not teaching you about the markets. I'm teaching you how I trade, right? How I trade, how I look at the markets. So every lecture is very important, built in module 1, 29 lectures and 19 lectures in module 2, which is a total of about 66 hours of trading. When I do this live, it normally takes me about 6 weeks, right? So once again, happy Father's Day. And because it's Father's Day, everyone, moms, anyone can use the link and register. The course is going to be 50% off. Right, guys, we've got so much to talk about today. Let me just pull up my list. I want to cover a total of 25 assets. And I always start off with a big, ambitious number. And then by halfway through, I'm like completely out of breath, right? So we'll see how it goes. But I ideally would like to talk about a couple of things. When I talk about market sentiment, number one, what in the financial markets happened this past Wednesday? What on earth did Jerome Powell say? Do we understand the things he said? I've taught you guys the difference between a dovish FOMC and a hawkish FOMC. What did we get on Wednesday? When you guys are listening in, did you understand that, oh my goodness, we're changing the plan, right? We had a Fed rug pull on Wednesday, swam out of a Fed rug pull because most of us really believe that we're getting closer and closer to a much more aggressively dovish Fed, right? And instead, we got something very neutral, right? Neutral to hawkish. And I'm going to explain later on in this video. Number two, on the same day, Powell showed up, right? On the same day, Jerome Powell showed up, to give the FOMC thing with CPI data, right? So there were a lot of CPI data come out, and actually it showed disinflation, right? You guys understand what disinflation is? I think I'm sharing the right screen, so let me just quickly pop in and quickly walk you through that. And then on top of disinflation with low CPI numbers, with supply and demand play a trick on traders, right? And I did jump on the pulse in our public, it's my public Telegram group, which I feel has been hijacked, and that's my fault. And I'll fix that, when I have time. I'll fix that. But we've got a public free Telegram group where I told you guys, listen, watch the charts carefully. So we're going to do that together today. And then on top of all of that, we're also going to look at 25 assets. So I just want to quickly show you what I mean by disinflation. This is Wednesday, the 12th of June, where CPI came out. And you can see core CPI came in under 0.2. Expectation was 0.3. Month over month, CPI came in flat at 0. No inflation. Expectation was 0.1. And then, year on year, we're going down. Remember, this number year on year is the most important number for Powell. Powell wants this number at 2%. It's a 3.3, which is fine because we are slow. He said it, not me. He said we are slowly progressing, and he wants to coast it up until next year. That's what Powell said. Amazing, right? How these guys change their minds, right? So it depends on how you understand this stuff. From an economic perspective, inflation is going down bit by bit, right? As a trader, it doesn't matter. We don't have sides. It's not an argument between, you and your wife or whatever. We just trade what the markets give us. And you really had to be a good trader this week to make money, because there's a lot of money, there's a lot of market volatility, and the setup's not perfect, right? Perfect. If you understand this stuff here. So once again, I don't do student intakes very often. In fact, I haven't even, it's just up to you. It's up to you if you want it. But if you want to understand supply and demand, we're walking you through this stuff literally step by step. This is what the series would look like, right? Each lecture is about 1 hour, 30 minutes to 2 hours, right? It sounds like a lot, but you want value, you want impactful information. Take this course. It's 50% off up until the end of June, right? So let's get into it today. I want to talk about Bitcoin, number one, Ethereum. Then we're going to look at the China 50, an index that, I've been into quite a lot and I haven't really covered in the war room. We're going to look at Nikkei 225. Then we're going to look at the NASDAQ, the Russell 2000, the US 30. Then we're going to look at the dollar, right? Looking at the dollar, we need to talk about USDJPY. We're going to look at USD Swiss franc. We're going to look at USDCAD. We're going to look at USDZAR. What in the hell is going on in South African politics? Actually, politics across the world. This week, apart from CPI on Wednesday, FOMC on Wednesday, on Monday this week, we woke up to the French president, right, losing to a far right-wing party. Like a lot of things just went, it's crazy, a lot of crazy stuff. In South Africa, if you're local, you would know that we've got a weird new government, forming up as well, right? So we're going to look at USDZAR, EURUSD, Pound USD, AUDUSD, gold and silver, okay, AUDCAD, AUDJPY, CADJPY, EUROAUD, EUROPOUND, Pound AUD, and finally Pound NZD. These are the 25 assets I'd like to talk about today. I generally always forget to do this, so please make it a habit that you don't forget to do this. Please like the video. If I say something that you like, if I say something that helps you, it helps me, but more importantly, it helps the algorithm boost this video, and I'd really, really appreciate it. Just a quick like. Even better if you comment down below and talk to me. I'm making it a habit to get better at responding to comments as quickly as possible. And if I've missed your comment, I'm coming back to you. Don't you worry, right? So that's what we want to do today in War Room 93. But I do believe it's actually to our advantage that we kind of like break down what happened in FOMC in a very short summary. It's not like normally I'd make a separate FOMC video, but there's not much. Powell was very neutral, him and his purple tie. But more importantly, there were a lot of things, that he alluded to in the markets, right? But before we go far, please don't forget, every day, in every way, I'm getting better and better as a trader. I'll say it one more time slowly. Say it with me, right? You got to affirm yourself, right? Every day, in every way, I am getting better and better as a trader. It goes better if you emotionalize that. It goes better if you meditate on it. It gets even better, quicker if you repeat it to yourself all the time, Eventually, you will then create a much more long, better and better trader affirmations card. This is my affirmations card for 2025, and my financial goal for the year and all my personal trading accounts is in it. And I affirm myself in the morning, I affirm myself in the afternoon. I've been doing this for about 4 to 5 years. I don't ever see myself stopping because it works. So one more time, every day, I'm very weird like that. In every way, I'm getting better and better as a trader. It's Father's Day. Every day, in every way, I'm getting better and better as a father, right? So let's rock, right? So I want to read the tape maybe after. So we're going to read the tape as well today together because I didn't get a chance to read the tape on Friday. So markets kind of like closed on Friday. I was a bit, zoned out. I'd already done most of the trading that I need to do in my swing setups the week before and during FOMC. Euro USD, I knew I was going to sell. You should have seen my stuff in the Telegram group. But price didn't trigger me, right? Price just turned a little bit short. So that was a little bit annoying. And I did say in the group, look at how Euro USD left that zone. It broke the demand. It broke the demand. Now, again, if you've done my course, you know that's a signal. You know that's like the market saying, milk it. When a demand gets broken, we automatically know banks have changed their mind, positionality has changed because the fundamentals have changed, the sentiment has changed, right? Remember, we're dovish, we went up. Now we're not dovish. Powell kind of like slowed that down on Wednesday, but market structure, and I really hope these war rooms keep painting this picture. Market structure speak a language so clear about the direction of price way ahead of time, before these big events even happen. And if you learn to talk market structure language, this, the course in front of you, supply and demand, if you understand it, you will then be able, on a scale of probabilities, which means I'm not always right, but damn it, I am definitely profitable, right? I am right enough to live off markets. I am right enough to make sure that my risks always are lower than what I take back home, all right? And that's probability, that's trading. That's a good trading psychological framework, right? The head of market probabilities, well taught, by the way, by Mark Douglas, right? So it was a fun week, right? So a couple of things that I want you to understand about, Jerome Powell. I'm just going to kind of like link this in, right? So Jerome Powell stepped through with the purple tie, and in a summary, number one, labor market, according to him, and statistically, I don't think he's lying. Labor market is kind of like in America has gone back to its strengths, or has gone back to what it looked like around pre-COVID. So just before COVID, just before lockdowns, just before jobs got flushed, just before workspaces were restructured to online and some jobs, people losing their work, all that kind of stuff, right? They've managed to NFP is always calculated non-farm. So jobs excluding farm jobs and many other jobs, non-farm role. NFP is not an inclusive report. I mean, I don't want to complicate your life, but there are many things that we could look at. We could look at when NFP dropped, that there was another report within NFP that actually tracked that about America was losing 650,000 jobs, right? Fundamentally, full-time jobs, and part-timers went up by 200,000 in the month of, we're in June now, so in the previous one, in the month of May. So the American labor market is being casualized. It's a very common thing in South Africa. You'll have a permanent job, all of a sudden, capitalists change that for you, and you become a contract worker. But what does that mean? It means you've got no job security. It means if your contract is now for 1 year, you're no longer on a pension, like, feeding your pension or all that kind of stuff. It's the character of the labor market changing globally, right, which is a big modus operandi of capitalism, right? So there are many things that are not in the NFP, but lo and behold, Powell is saying we have arrived now at pre-COVID labor market conditions, which is a good thing, because remember, this whole time, the Fed getting hot, man. The Fed, has been trying to recover from the damage that COVID did, right? This whole time, since 2020, that's when they went hawkish, right? And then when they went hawkish, they printed a lot of money. So sorry, no, they were dovish. They were very dovish. Sorry, yeah, they were dovish in 2020. There's a lot of monetary policy easing, a lot of monetary policy printing, which then created the inflation. And by 2022, 2023, there was a lot of freaking out about the inflation. And then they started becoming hawkish, raising interest rates to combat this situation. And in 2024, they're trying to mitigate it. And they've been trying to pull inflation down from 9%, 8%, 7, 6, 5. And now we're finally at 3.3. And it's taken time. You know, I kept telling people that dealing with inflation takes time. You're not going to fix it in 1 month with one rate cut or one rate hike, right? And so that's what he's saying, right? So labor market is back to pre-COVID conditions, right? And originally, like I said, I thought he was going to come out dovish. He wasn't. Powell was at best neutral, at best, but a little bit hawkish. There was a little bit of hawkishness in him, and we can see it in the markets. It's not my opinion. Look at the markets now. I'm recording this on Sunday. Markets have reacted Wednesday, Thursday, Friday to Powell. They've had 3 days to react to that man. And you can tell there's a tint of hawkishness in that sentiment, right? So, you know, I'm pretty sure they're going to, Powell rather, it made it seem like, you know, the Fed is hoping to coast this ride up until 2025. So they're in no rush for a rate cut, which is what the markets believe. The markets originally, if you look at the dot plan, the economic summary projections, which came out, you know, and I can teach you guys again how to read that stuff. I used to do it during the live readings, but this Wednesday I was on the road, so I couldn't do a live sitting. Where I was, it was just not, you know, conducive for that. But if you look at the sum of economic projections or the dot plot plan, right, you'll see that originally in the previous financial quarter, they priced in 3 rate cuts by the end of 2024. And so when you price in 3 rate cuts, you're telling the markets that you assume you'll be done dealing with inflation, number one. Number two, you're telling the markets that you believe that you're creating a condition of dovishness, right? You created a condition of risk on. You created a condition of saying, okay, fine, we can start to slowly preheat the market again. So assets like stocks, Bitcoin, EURUSD, your resilient assets can run. Now, with the current dot plan, there's only one projected rate cut. And even that, you know, Powell talked around it, never answered the question, never gave markets the confidence it's looking for. So there may or may not be a rate cut by the end of this year. All right. So, he's doing the dance. And I think a lot of things will be clear after American elections, which are this November, by the way. You know, who are we going to get? Sleepy Joe or criminal Trump? Who knows? Whatever. Right. So there was a very neutral to hawkish Fed that we got, right? The main key elements were economic activity is expanding to solid place. He seems to be happy with NFP results. He seems to be happy with the labor market. He actually said there were strong job gains, low unemployment, which, you know, however you look at that, I think the number that they want for unemployment is 3.5%. And I saw unemployment went up a little bit in the month of May, but I'm sure it will even out. And he did say inflation is easing, but still elevated. It's slightly going down, but it's above our 2% target. And because of that, the dot plan for now just indicates, you know, one cut. And that one cut could be in September, as some people say, but I'm leaning more towards, maybe December, right? But that could change. And then, as usual, the outlook was going to be monitoring data for economic outlook. You know, anytime they could be ready to adjust policy if there's a need. But for the most part, it was a hawkish stance, you know, because they are still maintaining we're not stopping to deal with this issue until we get to 2%. So that's quite hawkish to say we'll do whatever it takes to get to. If anything comes up crazy, I don't mind doing a rate hike again, right? Until we are committed to the 2% target. 3% is not good enough. So that was a little bit hawkish, right? So guys, for the last 6 weeks, and if I talk in terms of war rooms, war room 92, 91, 90, and 89, right? And I did take a break for 3 weeks in between. Each war room represents about a week. So for the last 7 weeks, plus the 3 weeks I was away, market fundamentals keep changing underneath us. And you got to understand this stuff, right? You really have to, take time to really get it. And I know it's happening. Once again, the course, always there for you, ready for you, right? Tons and tons of solid information there, right? But the fundamentals are changing. So as a trader, you gotta be nimble. You gotta be quick to move, right? You really have to fully embrace the kind of things that are there in front of you, right? So talking about that, the only thing that could shape sentiment this coming week, I truly believe sentiment is going to ride on what happened last week. FOMC is quite a big thing. And we already have CPI, right? So the next big event for me, generally speaking, is the next NFP, which is in the first Friday of July. Generally speaking, my trading swings, my trading plan, for the next 2 to 3 weeks is kind of like set, right? But we could get a slight explosions, up and down moments this week. Fundamentally on Tuesday, look out for Tuesday. We've got core retail sales, remember? So they want 0.2%. If the number comes in above 0.2%, 0.3, 0.4, blah, 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 strong dollar. If it comes in lower, weak dollar. That's not enough. Then what do you do with that? Where will the dollar be in relation to the release of the data before 2:30 on Tuesday? Using scenario analysis, which I taught you guys, the 1 hour time frame. Check that out. So at 1:30, pop in your charts. Is the dollar closer to a demand or a supply? Is it valid or not? Is the daily trend going to support the demand or the supply? Is the daily trend valid or not, right? Because that's all it means. Okay, and if the number comes in 0.2, the dollar is going to bounce up. If it comes below, it's going to use a supply to retrace down, right? It might not be the end of a trend, but it could be a retracement, right? And then the next big-ish event on Wednesday and Thursday, this week is about the pound. The same focus we give to dollar, we really should be showing love across the board. I'm just a bit biased, right? But this week, pound has inflation data. So this week, I think on Wednesday, if I last checked correctly, just give me a second. Wait. There we go. So pound 8 a.m. on Wednesday, annual CPI, right? So they look how close they are to that 2%, right? So I told you the theme for this year is monetary policy divergence / the year of rate cuts. Whoever's cutting rates first, whoever's getting to their targets first, that's the winner. Currency-wise, that's the winner. And the dollar is starting to lag behind. The dollar is lagging behind because they're not yet cutting rates. Euro cut rates a little bit by 25 basis points. Okay, so because of that, right, we will get monetary policy divergence. And when the fundamentals align, what's divergence? It means when one currency is doing one thing and the other currency is doing the complete opposite. There's a divergence. So if euro is rushing to cut rates, and the dollar is lagging behind, there's going to be a divergence between those two currencies. And that always makes magnificent trade. Look at USDJPY. Look at how strong that uptrend is. 3 months ago, 4 months ago, a year ago. That's monetary policy divergence. Strong dollar versus a central bank in Japan whose goal is to keep the yen as weak as possible, and in America, keep the dollar as strong as possible. Those two make trending markets. When you get monetary policy divergence between two assets, you get a beautiful trend. And that's where at least for me, the trader, the style that I used to trade, just swing to positional trading. I get in there and I hold on for dear life. I hold and hold as long as I can, right? So, this is going to be an inflation report on the pound. And then the next day on Thursday, if I'm not mistaken, am I mistaken? No, there we go. The next day, you're going to get monetary policy summary, right? Their version of a dot plan. And you're going to get MC bank rate votes, right? This is slightly how they do it. And then you're also going to get an official bank rate. Right now it's 5.25 or 5.25%, and they're hoping kind of like it remains unchanged, as they have left it unchanged for a very, very, very long time, dating back to last year. And so, it's quite a big week for the pound. So do expect the pound to dance a bit this coming week, right? But yeah, that's kind of like, the pre-summary of what markets are doing, and how to move forward next. So moving forward, I'll then give you my detailed analysis asset by asset as we crack a lag, right? Let me just please share my screen. Right, so in front of you now, I hope, is screen number 4, which doesn't matter to you. You should be looking at, I'm talking to you guys if I'm doing this live, like you're gonna correct me. Right, but in front of you should be screen 4, which is my trade view. If it's not, I apologize. I'm an old, tired dad, right? So we've got TradeView in front of us, right? So let's see. Perfect time to like while I catch myself. Like the video, talk to me in the comments. Hope you're doing well. Hope you're doing well. Hope you're really doing well. Life is hard, man. Hope you're doing well. Hope your spirits up. Hope you're taking care of yourself. Hope you're affirming yourself. I don't want to miss this one. Right. So we're going to talk Bitcoin first. I haven't done this in a long time, although, as a swing trader, there's not much to do on a day-to-day basis, except make money and wait for money, one of the two, and lose money. Right. So we've got Bitcoin in front of us. This gray area, I taught on it in War Room 89 or 90. You're just going to have to kind of like find it. Either the video where I say I'm back, I don't know. But this is a range, right? So this was a long range that Bitcoin had. NASDAQ was in the same range as well, just to give it an example of risky assets, how they think, how they move. And, it broke down from this range like NASDAQ did. NASDAQ broke down the range first, and then NASDAQ went up to beat the range first. Bitcoin broke down the range and then went up to challenge, its previous highs, and now it's ranging back down, right? And I think many weeks ago in my Instagram account on stories, I said, well, the next time I want to buy Bitcoin as a trader, not an investor. As an investor, I hope you guys know that as an investor, you technically should be buying monthly, right? You should be dollar cost averaging as an investor. I mean, it's not, you don't, it doesn't matter. Market conditions, day-to-day market conditions is not the barometer you use to invest for the rest of your life. It's not. The barometer for investing is discipline. This is how much I'm taking aside monthly, guys. It will pay off. Man, if I showed you, if we were to do some quick maths here today, you'll be surprised, right? Some of you are playing mind games with yourself, right? I mean, if you're in South Africa, there was someone I was talking to the other day, and I was like, what if you just, every time you bought airtime, because this guy's always on his phone. Like, I hate my phone. I hate text messages. I hate WhatsApp. I lose my phone. Half the time I leave it in my wife's bag. I really hate my phone. But there's a thing, like this person is always on his phone, is always buying airtime. So I asked, how much do you spend on airtime? He said roughly about 600 rands, a month. If you're not in South Africa, just to put it in relative terms, USDZAR, just put it, just to convert it. It's not a lot, but it is something to think about. And I told him, look, man, if you're going to be spending 600 rands a month on airtime, which is about 32 US dollars, all right? That's not a big number. If you were to equalize that, so every time you buy airtime for 32 US dollars or for the month, put 32 US dollars in something, in XRP, where it's less than $1. In something, investments, right? I did a brilliant video on multiple lump sum investments, or making big investments. Like, I'm going to buy Bitcoin, all of it, for 50,000 US dollars at once and wait. And making incremental but consistent small investments. You'll be surprised at the results 3, 4, 5 years later. You will be surprised at how much of your own life you can buy back. Fathers, you got to think about this stuff, right? Fathers, too far. You should all have a ledger. You should all have a ledger. You should all have a crypto cold wallet ledger for each kid. And if you're spending $600 on airtime, you should be buying the equal amount of airtime, small cryptos, and putting in that ledger. And you give it to them at 21. That's legacy. And that'll turn out millions, unless you're buying silly things. Unless you're buying silly crypto assets, there is no ways you can lose as fathers. As fathers, you should be thinking about your pension. As fathers, in South Africa, there's something called black tax. You should be thinking of a way around that you don't want to live off your kids. And the only way to do that is to build your pension now, right? I don't drink, but if you're going to go have fun, which is your right, over the weekends, and spend 1,000 rands, however much it costs to have a jaw, that same amount should be budgeted into investing into your future. I'm telling you, I'm going to move on now. That's not why we're here, but I promise you, you do this consistently for 10 years, you'll be surprised how much of your life you can buy back. right? Early retirement, all that stuff. It's possible, right? Anyways, I won't preach again. I'm done, but I'm worried about everyone, but I'm done. I'm done. Did you know that $1,000 if you were to double that every year? I'll do this in another video. I'll do this in another video where we have time, where I can show you what the link is between global life expectancy, right? So I looked at stuff. I'm a researcher anyways. Global life expectancy, required age of retirement, and rate of return of investments, right? If you combine these three things, you should have a plan based on your age now. So you could be watching this video and you're 20 and you think you have time, you don't. You could be watching this video and you're 40 and you think you're late, you're not, right? It's just how it works like that. But if you have $1,000 and all you did in trading using 0.01, 0.01 for the next 10 years. If you say, I don't want to fall for greed, I don't want to blow my account, so I'm going to risk $5 per trade every time I take a swing trade, hold it to make 30, 40, 50, 60 to $100, freaking realistic, too realistic. And when you get that profit and your capital grows, you just keep maintaining the same lot size. By the end of the day, you'll have doubled more, but at a minimum, you could turn $1,000 to $2,000 in 365 days. If you're to double the end amount, not giving it to me, I don't trade for you, we don't trade for you. I'm saying you do it yourself. You learning to do this yourself. If you're to double this for 10 years, double your end amount in 10 years' time, that's $1 million of passive income that you did watching war rooms, right? I'm going to do this for as long as I can, for a very long time. I take these trades with you all the time. So I know my win rate. I understand it. I am patient. I wait for the swing to develop. If we get stopped out, we get stopped out. If we can add, we add. Right. I'm done. Right. So check this out. Bitcoin, I'm done. I promise you I'm done. But I do want to see financial success for all of you and your families. Right. So, I said this a couple of weeks ago with Bitcoin. I did something like that. I was like, okay, well, I want price to come back here and then, I'll buy again, right? And then what happened was, this was a long, long time ago. I don't even know if I took a screenshot of that projection, right? Price was still had just done something like this. And instead, markets gave us a, separate, what's this called? Engulfing demand. I don't know. I went blank there. And instead of coming down, really retraced this line. So there was a lot of bullish news in the markets. Markets shot up, and that was fine. So if you're using scenario analysis or you're a short-term trader, you could have still caught that, right? So I'm still waiting for this to play out. What that means is I'm doing nothing in this zone. Had you taken the course, you would know about glass effect. You would know about, this plus this is a disaster for 365 students. We really don't trust these levels, right? But now that price has developed a bit more, even taking a buy here, I'm very worried about it because I haven't measured it now, but we can do it together. What's going to be my risk reward ratio? I feel like I'm forgetting my words today. What's going on, right? So 2,1:2 is not bad. It's not bad, right? It's possible. And why stop there? Because markets this past week gave a valid new supply, right? So there's a strong supply, there's some selling pressure. So something is going on here. And I assume with Bitcoin, with the week ahead, if the selling pressure ensues, right, then we're going to get this downward movement there, which is going to make it less enticing for me to be in the buy now. I might take the buy, short buy. 1:2 is not bad. And then we need to ask ourselves questions, right? Why is price not breaking this zone and fluctuating to higher highs? And the answer is in back testing and reading the tape. What happens when we get Bitcoin halved in that regard on the 22nd of April? How often does Bitcoin move sideways every time it breaks an all-time high? All that data is there, right? So, the preferred model for me is actually for price to continue on this path to the downside, right? Actually remove this area, even if they don't remove this area immediately. So even if there's a bounce up and then this and then that, and then eventually remove this area, that would be great, because as you see here, we marked out zone 3, a previous supply, a previous valid zone, which was then taken out, and they left too strong demand. So I would want to do a lot of buying here, trade buying, investment buying, because I don't think price is going to bother going any lower. With the way BlackRock is really sucking up EFTs right now, I think they're trying to get a Solana EFT, I don't know how much time institutions want to need to maintain these prices as low as possible. They keep buying before we see the big, much anticipated explosion to the upside, right? So just watch out for this. Number one, supply there, definitely valid demand, but be careful about the demand because now your risk reward ratio is cut short, right? I think it would be foolish for us to assume it's just going to explode to the upside. It can, because the all-time high is now officially weak, very weak, right? Very, very, very weak. It's called glass effect. There's a lot of selling pressure there. But we might see an overall shift in the markets, right? As we move a little bit hawkish. Let me show you what hawkish looks like, so that we'll come back to charts. But I don't want to keep using terms, and then there isn't moves out of the way. Sorry, I don't want to keep using terms that you guys don't understand. Although I have explained hawkish and dovish and whatever, but when I say hawkish, this is how I want you to think about assets, right? So if you think risky assets, so that's your stocks, your crypto, EURUSD. Where are my indices? What's going on? What's going on? There we go. Right. So this is when we were hawkish with Nasdaq. This is when we were hawkish with Nasdaq. And I told you to buy. I really told you this was going to happen, right? This is right. See this there? This was monetary policy easing, right? This was when they were printing money. This is COVID 2020. They were printing. You get money, I get money, right? Because it was COVID, blah, blah, blah. And then the Fed started to tighten, right? They started tightening the fund, the bank, the purse by increasing rates. They got hawkish. When you get hawkish, your risky assets always suffer. They always fall. So now, as you can see, you see how far we went being hawkish. We went, yeah, this stuff is there for you, man, right? So went all the way up there. All right. So would say it was a 55% increase, just hawkishness, right? Fine. Now we got, so this dovish. Why do I keep missing this up today? Right. So hawkish is down, dovish is up. Right. Now look at how far we've extended, far beyond previous all-time highs, right? Ever since power became a bit more dovish, at start of last year, 2023, right? We really super exceeded that, right? We're like at 83%, right? So markets have fully recovered. What a perfect time to slow them down, right? So I'm not saying Powell is going to be more intensively hawkish. That's not what I'm saying. I'm saying just be prepared, be nimble, be ready. But he was not a dovish Powell this past Wednesday. He was extremely neutral and slightly more hawkish, right? So you can expect your risky assets to later, lo and behold, fall. But what can we do, Leroy, to understand markets better? Stay grounded by your supply and demand. Look at the structure, right? Look at this. Higher highs have been formed. So why would you buy Nasdaq up there, right? Only someone on drugs would do that. And there are a lot of traders on drugs, right? You'd want to wait for it to come back down. So you see, but we'll deal with Nasdaq when we get to it. But I wanted to give you guys a clean example of how markets move when we say hawkish, dovish, right? So I think Bitcoin loud and clear about what I think is about to happen. So the next one we're going to look at is Ethereum. Right. Okay. Clean and cut. Right. So even with Ethereum, I expect price to go down. So marked up that if it's marked up, then it's already got pending orders. That's why I thought, let me add this to the list. Right. I expect price to go down. Which means, again, be very wary about that lower demand there on Bitcoin. Let price do its job, right? So with Ethereum, if you're not in the sell, get in a sell. If you want to get in a sell, several sells, I'd use H4. All right, we got a nice push up on Friday. I thought the zone was too big, so I let it go. But per chance, price does climb a little bit higher. Per chance, this would be a nice place to come back to. This would be nice. All right, H4 on Ethereum, per chance. So as Bitcoin is pushing price up, the demand that we looked at, the daily supply zone, and if Ethereum was to react similarly, this would be a nice H4 zone. But remember, Bitcoin daily, Ethereum H4 doesn't give us a good look. So if we use the daily, this is better, right? So this will be nice to get into some of that action, right? But it looks much closer. But yeah, this will be a good area for me to start selling again, because I really believe that maybe for now, market prices need to go down just a little bit, right? Just a little bit. And then we start to see what's happening there. Right. So that's Ethereum, all the best traders. Next up, we've got China 50. You guys know, I've said this story many times. Most of the members of parliament in China are multi-millionaires, some are even billionaires, and most of them have their money locked up amongst many other places, including China 50. So it's like, it's like there's no separation of power. Like your government has an invested interest in making sure this asset works. Right. So it's had its beautiful ups and downs. There's a clean swing trade, but I don't think would be in it as war room. It was a clean buy rather before I even got back. Right. Now it's about what do we do now? Right. I think price is negotiating around the supply on the governing time frame, which is over here. Governing time frame, sorry, and by that I mean the monthly chart for those who don't understand how we do things at 365. A Mayorial time frame, same thing, right? Clean reaction, created its own weekly bearish engulfing pattern, its own weekly supply zone. Again, reacting to the left and price is moving down. So the question now is, will this area hold, given that price was originally leaving a valid governing demand? So that's a big point. Given that price is leaving a governing demand, I don't see markets coming back to make a fresh touch. Now that you guys are here, I can delete this white line and maybe draw in a zone again, right? So it's going to be quite an interesting contested area of value, truly, because if markets bounce back here on the weekly, right, then we don't really have risk to reward ratio, right? Oh, I don't have the way I trade. I don't have the risk reward ratio that I would desire for a buy or a sell, Because if I buy here, how far is price going to go up? If I sell here, how far is price going to go down? Hopefully the daily will give us some type of clarity. And on the daily, we can all agree that this area has been contested, if not removed. Let's just see. Yeah, it's been removed. Right. So on Friday, this area was removed. Perfect, which is in line with our downward thesis, right? This is a trade you took in the senior room, but anyways, doesn't matter. It's still going to benefit you here. And then we can start to do something like this. Within daily, right, this is what we call confluence. But also within daily, we've got a zone, that broke market structure to the left. You can see this low here was taken out by this beautiful supply. By Friday came, similar to Euro USD, markets failed to reach that supply, but could easily start to make its way to the downside. So just be very careful of that. We know that there's no demand here left. So now we can start to finally draw some zones that make more sense, which is where is price going to next? Remember, the whole point of our trading course, institutional supply and demand, is to actually be able to predict what price will do next. Not price per se, but people. I need to understand that human beings are creatures of habit. So what we do here is we study the people who move markets, which is not us retail traders, but banks and institutions. When you understand what they do, how they think, because they do it repetitively, because human beings are creatures of habits, because it makes them money when they do the same thing that works, we just simply follow suit, right? So we've got a strong demand down there, and I'm just worried about this area because of the way it's set up. I would like to sell up here, but I would not be surprised if price left me behind. The only thing left to do now is to maybe consult Auntie. And people like, who's Auntie? Auntie Fibonacci. Right, so we pull up a Fibonacci. All right, we've got, as you can see already, the golden ratio area was always up here. Price came back always up there. Price hit it. Price, dragged down, right? So now we're looking at this zone here, 0.38 to 0.23, which is what we call a 365, potential continuation pattern, PCPs. PCPs are very common in the course. We do that a lot in module 1. There are different types of PCPs. In the private group, I saw Trevor was asking about 50% body candles. That's in module 2, buddy, but I did see you answered. I was happy with that answer, so I stayed out of it. I like it when students help students. It's really encouraging. And Trevor, if you've got problems, or need clarity, let me know in the group there. right? So this is nice. This is quite clean. Markets reacting, right? So this is a PCP. It could work. It could not, right? All type of trading will come with some type of risk. So spread it out. I would have a pin in order here and a pin in order here in case this doesn't work out, hoping that whichever one I get can drive price lower. On the governing time frame, I don't remember if we did it, just to have a look. Governing time frame, markets would love to keep moving forward. On the governing time frame, markets would love to keep going to the upside, right? Just right now, in a governing perspective, markets are in a retracement area. I just want to see what this is pointing to. But right now, markets are in a trace. That's golden ratio. And then this is the 50% mark, right? So on a governing perspective, markets seem to be retracing. And I go back to daily. Right, so the first one is 50%, right? So just above this area and then further down, right? So yeah, we'll see how it goes. Just keep a close eye on this and keep a close eye on the zone. But that's my take on CN50. The next one was J225 or the Nikkei 225, right? We spoke about the supply. Check, roll the tape, roll the tape. War Room. I know I'm triggered, but I just remember from which war room. This is 93. So check out war room 91 or 92. Spoke about the supply that is going to hold price down. And then we spoke about how eventually, NASDAQ needs to follow suit. And it's not. NASDAQ is trending up, and Nikkei leads. Nikkei starts first. And you can see, that's exactly what's happening. I don't like how, there's so many weird zones very close by, right? Like, for example, problem number one is that one. Will that get broken, right? Problem number two is the thing that caused this zone, which is this right here to the left. What's going on there? But at least that was broken, right? So it's just this that we need to worry about. Then if that gets removed, then we've got a beautiful nosedive in J225. Very beautiful nosedive. The fact that on Wednesday, FOMC spoke, and in reaction to FOMC, you can see there's a strong bearish engulfing candle, right? That says a lot. Again, my laptop battery is running low. All right. Let me just quickly pause this. I'll be back. Oh, you won't know because it'll just be edited together. Back, right. So what did I say? I apologize. Right. So something about supply. Yeah. So supply is engaged. Friday, reaction to this. So if you go to H4, I'm pretty sure if you missed our entry, hopefully on H4 would have been kinder to you. Doesn't look like it. Okay, clean break. This is very nice. Right. So look out for this on Monday or Tuesday or whenever. Right. So anti-Fibonacci will let us know if the retracement is done or if price is going to come back up. Right. So I'm targeting previous high to this low first. And you can see, as usual, right, golden ratio comes through all the time. It's just a tool, the confirmation tool. We never trade the stuff by itself, but it just seems to work all the time. Right, so I'm going to delete the Fibonacci and then make that clear, right? So this is what you're looking for if you're not in this trade already. You're looking for a play to this zone, right? And they could just use this white line because this is where market structure broke, right? But if you're lucky, you might get price to react in there, and then price will drop with you or with us. And if you're not lucky, they'll be stopped out, which is why you always want to be in the higher sell. All right, sell high, buy low. Right, that's the Bible. Sell high, buy low. Sell high, buy low. Right, that's the Bible. Right, so yeah, look out for that stuff there. Not much to do right now. Like I said, I don't like what we have here. So this is going to be a trader's choice in terms of taking profit, right? Because very soon we will be encountering some serious demand. So far, zones like this get taken out. This was taken out, and now this was taken out, on Friday. Okay, so then we're looking. It'll be very nice to rather just markets were to chase liquidity. Right. If you're already in the trade, this is really what you want to be praying for. If markets can just like really work their way all the way down there, that'll be good money for us, right? So next one, NASDAQ 100. I think this is very self-explanatory. The last time we spoke about this in War Room 92, I showed you guys a potential play in here. All right. And I closed. It's unfortunate, right? Right. I really should have rode this wave. So maybe just to give the chart, since I'm no longer in it in the markets right now, I should remove this and remove that, just so that my screen doesn't have a lot of stuff, right? So I thought, well, I was going to hold until markets come back in here. Why in here? There's a beautiful H4 that we wanted. This was like a week ago, right? Since then, markets have developed, right? There's that H4 there, right? So I'm going to remove this just so it doesn't confuse us. Then I'm going to go, wait a minute. Let's go to the H4. Quite messy here. Quite messy. Right, so look at this H4 area. So this green zone is a daily demand zone now. So the latest one for the next phase, the next impulse, the next leg, right? In module 2, I teach you guys how to look at the supply and demand curve, right? And the curve talks about phases and legs in the markets, right? In module 2 of the course, right? So this is interesting, right? So you got your H4 moment, right? Engulfment, and then a tap, then an explosion. On the daily time frame, the zone feels a little bit fresh, right? So because of that, I can only take it on the daily, right? I'm looking at, around the 1900, 1800 with the area of margin with 365 numbers, looking at about 35 points. So don't forget that. So I'd really cover the whole body, give or take. But that's about 70 something points. So somewhere in here is the perfect medium, right? So there we go. See, 36 points, or not points, but 0.36. This is the area of margin, right? So white and then, stop loss just below this area. That's what I'm looking at happening there. Although this doji here on Thursday could start to represent an interesting take, right? So, and then other thing to look out for is the fact that, this was Wednesday when CPI came in low. CPI numbers were low. It was disinflationary, right? So remember, when the CPI number is a miss, right, the dollar can't be strong. The dollar collapses and risky assets take off, right? So what's nice about this chart is, or interesting rather, is that it hasn't been talked down to by Powell's neutral to hawkish stance, right? And I wonder if there's something else, pushing, tech stocks. I saw Apple did very well. As a stock trader, I'm always interested in this kind of stuff as well. When we're looking at Microsoft, Apple, these guys had very, very good days. Very, very, very good days. Even at the closing bell, Microsoft and Apple were doing incredibly well. So there's a kind of like, stuff that we need to understand about the markets that we shall see. But again, if you're looking for, a short time trade, and me, I'm looking for swings, but if you're looking for a more short time trade, markets might not give us the whole come down to the green zone, right? So look out for this area here, all right? In fact, maybe this is a perfect time to draw a Fibonacci. Come on, man, what are you doing? Right, let's draw a Fibonacci on the H4 time frame just to see what we're doing. You can see the first swing high was here, but markets already broken that. So automatically, my Fib is no longer the most useful tool to use, because I now have a higher area of value above my last swing high, right? But if we go with a Fibonacci, you can see on the H4 time frame, this is a very good place for markets to react. So I wouldn't ignore this. I would not ignore this as a trader, because you'd be waiting down there on the daily, but markets could retrace here. So I would do this and then thank my auntie Fibonacci for her time, Akini Hashi, to see what's going on. Okay, fair value gap confirmed, but not a real order block. But this looks very interesting, very close to an area of value 225. So price could come here. And then I'll just make a note. I'd say H4 fresh area, right? Oh, it's obviously fresh. I'm gonna say H4 demand and just leave it at that, right? Watch. Be careful. Be careful. If one of the things that swing traders tend to do by mistake is to be so stiff, right, in the way they view the markets, that they miss trade by price simply never coming to their zones. All right. So you really want to buy down here, because anyways, that's the lowest zone. It's a demand zone. It's really perfect. But you don't want to miss the opportunity where price turns here, right? So what the next thing to do now is to wait, because markets on the daily time frame have not given us a swing high yet. But if price was to do this, so you just need a red candle, 2 days like this, just like this. You see, swing high. And then now you could then start to draw a Fibonacci on the daily time frame to match the swing high. Right now, you don't even have a swing high. Markets are parabolic. They're going up, right? And you could still see if it was to happen, say, Monday, Tuesday, that markets cool down, you see that the H4 demand is still in line with the daily confluence of that golden area. And you have no idea. You've just received, 300 US dollars worth of teaching, right, in this simple example, right? So make your money, make smart decisions, right? After this, we've got the S&P 500. Right. Okay, this is already marked out. I'm very excited to buy there. It's very similar to NASDAQ, right? Just slower. And you can see, look at that. Look at the S&P 500 plain ball, right? So now we've got a swing high and a swing low, and I'm coming at the bottom of this area of value. And then we've got the bigger, trend where we really, and this is for those of us who are still holding S&P 500. It's unfortunate I had to get off NASDAQ, right? But S&P 500 is still in, and I'd love to add if we're still buying, right? So this area of value will tell. So if you're in this original swing, your stop loss, right, to lock profits should just be below 5,300. Or that's where mine is anyway. It should just be below that area. And you're really hoping for a bounce in this area here. I know the charts are getting a little bit messy, but I pray the understanding is clear. Right, you're hoping for a bounce like this. And if you're in this original buy with me, you want to have your stop loss here to lock the profit so far and then bounce up, right? So that's fine. In terms of the overall trend from there to there, you can see our golden ratio is where I'm saying just put your stop loss below, right? But we could get a nice 50-cent bounce because of this beautiful order block there. Here's two fingers crossed, right? And then if we look at the absolute immediate, because this is a somewhat of a new swing low, swing high zone there, we can do something like that. What am I doing? Wrong tool. From there to there. And then we'll just jump straight to H2 because for clarity, right? And you can see there's some order blocks in there, but this is still for me the best one. This is still for me the best one, but you can see between 50% in the golden ratio on the 2-hour time frame. There's a zone there. Markets are slowly but starting to print lower lows. So we're really hoping that price continues to come down, which then gives us, I guess, an inclination that NASDAQ might start to do the same. NASDAQ might start to follow suit. Right. The next one after this was Russell 2000, which I know we were also in from the previous war room. We were selling. And, it just, hold on, baby, we're going home. Right. I'm still in it. We'll see. We'll see. This is it. You come to war rooms, we just keep holding. Oh, we take profit, right? This is big. The zone here is very big in terms of decision, right? So I don't know. I really don't know what to make out of it. I like the fact that we printed a massive a red candle. I like the fact that it took out a demand. I am aware that markets might be very itchy for a retracement. And that's what I'm thinking through, right? So as long as price doesn't go above, this area here, then I'm fine. If it does, another way to think about it is maybe to put it there, but it's very close to your entry. So some of you are not really good with holding trades. And when you hold trades and price does retrace against you, the war begins in your mind, right? But this is a good supply for price to continue the downward pressure. Depending on how markets react to that demand that I said I'm worried about, that's going to be the determining factor whether I add to my sell or not, right? So depending on how price reacts, right? So right now there's a bounce, but you see on tomorrow, Monday, it's a public holiday, but I don't think it's a banking holiday, right? So if markets continue down like this, I'm very happy with that to add there. But if markets really bounce up strong, right, then I'll just let it go. I won't get involved, right? So I hope that's clear. That's Russell 2000. The next one is the US 30. Right. So, NASDAQ is the only thing that's really pumping up right now. Elon Musk did get a brilliant 70 vote. So he's doing well. And Tesla did, really contribute to that bounce right now. But as you can see, US 30 right now has been doing quite well. After breaking all-time highs, which was a while back, it's kind of like fully retraced back. we start to draw these supply zones here on the daily. We can see what I'm talking about, where markets break here, markets keep coming down, markets creating finally a PCP, or rather a CP, and an engulfing candle continuation pattern to the downside. And then markets using that despite the value gap above, right? Markets using that, to pump a little bit lower. And then there's this demand that, where all these assets are, it's like weird demand that we still don't know what's going to happen. Will price break it? Will price continue? If I take one step back on the weekly time frame, you can see that the bearish engulfing candle on the weekly is massive, right? Very, very big. And all we have on the weekly is PCP, potential continuation pattern, right, to the downside, right? So it's a chart to look out for. Unfortunately or fortunately, I'm not in it. So if I was to get in it, this was so nice. Why did I miss this? Or did I either I sold and I closed? But I know currently on the 16th of June, I am not in any US 30 trades. Go to 2 hour. Euro USD and all risky assets on the 5 minutes at a beautiful demand here on Friday, or a price started to shoot up for retracement, right? I wouldn't be surprised. This would be nice. Imagine if life was so easy and kind that markets just, exploded from here to the downside. I doubt it, but it'd be very nice. It'd be very nice to get, because literally by a 365 number, right, everything is aligning quite well. And that number, I'll give it to you now. Coordinates. So let's do, there we go. So 38,600, and remember, 35 small points is what we're looking at, area of money, right? So technically speaking, most people are triggered already in sales on Friday. Those of people like me who are not in there, it's going to be tricky to get in, but some people already are triggered. Markets did start to react to the supply zone. And so that's what we're watching. If the supply zone breaks, then maybe we change plans about the sell side. But right now, as you can see for yourself, consistency is key in the markets, printing lower lows, lower lows, lower lows, lower highs, etc. So it's only a matter of time until a decision is made. And this supply where we're at right now will be that decision maker. Markets break it moving forward and start to break highs. And then we know that that downtrend is over and follow suit. But for everything that's leading, Russell is down, S&P 500 is down, NASDAQ is up, but hopefully showing potential to slow down. And US30 has been down, right? Literally has been down. So where is it going? On the weekly time frame, like I said, to get a good sense of where it was going, we had to clear this, right? And this is reacting to that, right? If this gets removed, right, it's very rare. Those are like a lot of points, all right? But this would be a beautiful place to buy. But it's going to be very hard to push an index down there. But look at it. It has a history. It can do it if it wants. Weeks and weeks and weeks of just dropping and dropping. It can do it if it wants. So I'm not counting it up. I'm just saying, geez, you're so close to it. You made a new all-time high. Now it's falling like it's a currency. Right, the dollar next. Right, and maybe before I talk about the dollar, or as I talk about the dollar, I really want to highlight a couple of things here as we talk about the dollar, the US dollar. Right. So on Wednesdays, you saw on Telegram, those of you who are on the public Telegram, I did post that, guys, and everything is timestamped, so you'll see for yourselves. I'll put up screen grabs here. But I did highlight the fact that, listen, it's very, very important to understand supply and demand, because when you do, your trading life becomes a life free of anxiety, a life that's not, you're risk aware, but risk doesn't control you. The fear of losing money doesn't control you. So I just want to pull this up because I absolutely enjoyed the way it happened. And I think it was just a fundamental example, right? So the first thing I said on Wednesday, this was about, say, 10 to 2. So the data is going to come out at about 2 o'clock. Can you imagine? 2 o'clock and 2:30. So about 30 minutes before, I said, look, watch your risk, lock your swings, blah, 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 blah. But watch very carefully. So I want to do this with you nice and slowly, but you can see the screen grab is there by the side. We're going to find Wednesday. So look at this. The week before the weekend question, so 2 weeks ago, markets made a demand. which we spoke about in our war room. So markets did this. And this demand was interesting, right? And sorry, let me remove this so it doesn't, this is just a weekly trend line that I was talking to someone about, right? So yeah, this is a chart. So this is happening on the 7th of June, right? The week before or whenever, I don't know. CPI was on the 12th of June. All right, so about 5 days before CPI. This is so important. So let me cook it nice and slow. All right, let me explain this to you, in the best possible way. I just want to quickly check my dates so I don't make stuff up. Yeah, so CPI, FOMC, Fed rate were all on the 12th. Now, in front of you on the 5th, and I covered this in the previous war room, you get this reaction to this demand that we've located in like 3 or 4 other war rooms together, right? We keep talking about this demand and we keep buying here, coming back down, buying. And then this now has glass effect. It's no longer trustworthy, but they break it down one trend and then they repair it, temporarily creating a demand on the 7th. Now, whenever there's big news, I'm pausing the war room. I'm teaching now. Whenever there's big news, there are 2 charts that you gotta pay attention to. You gotta pay attention to the dollar because it represents safe haven, which represents a mindset of the institutions. Dollar strong means we're risk off. Dollar weak means we're risk on. All right. And then the second chart that you need to look at is EURUSD. So here we've got 7 June, boom, strong explosion to the upside. The Friday before CPI. So this is because of NFP. So on Friday the 7th, we get a strong NFP report and there are positive gains, right? They're expecting 182, they get 200 and something, all right? EURUSD, let's go to the daily. I'm not going to delete my lines here, guys. Just see through them because I'm going to forget to fix my charts when I come back. Right? I just want to find the 7th of June. The 7th of June on Friday, CPI, what do we have on the 7th of June on Friday? A strong supply created. Why? Because dollar is strong, so there's a swap, right? A rugby pass of institutional flows. This is not there. In your minds, this is all I want you to look at. So on Friday, there's not, when I teach this stuff in module 1, I remember it's in the recordings. I always say, there's nothing you can do here. This move is the banks moving first. For a beginner, you just go, oh, wow. Thank you for leaving your footprints in the sand. That's what just happened there. They just told you what they want to do with EURUSD. If you're too lazy to follow CFTC data, you're too stubborn to buy our course, I don't know what it is, but this is another perfect footprint for free where the banks tell you this is the plan. You as a trader rush. Most of you try to capitalize this movement. Retail traders, they teach you now that this has happened, a trend has started. Some of you start to sell here. You're like, yeah, we received confirmation. Now we must sell. This is how they chow you. All of you lose money that way, right? So we've got a strong dollar on Friday here, exploding up. And in reaction at the same time to NFP data, a supply is formed. We speak about this in the war room. The previous war room, like, oh, okay, I would like to sell because remember, we'd already started selling up here, right? Remember that. Remember we say USD parity, we're looking for this, we're waiting, we're going to buy. And then I stopped buying somewhere here because we were very close to a supply and I didn't know if we're going to react to this one. And then there we go. We got tinged here. We spoke about it, I think, in the private Telegram group with Alvin saying, okay, fine, this is what's going on, And then markets, NFP comes and they give us this beautiful, beautiful engulfing pattern. Fine. Now, what happens next? And here I am on the, it would be so sad if I'm not sharing the right screen because at some point I had to look at stuff on another screen. Can I just triple make sure we're still together, right? We're still together on screen 4. Fantastic. Right. So all of a sudden, the Friday, look what happens now, Monday, the next day. Monday trading day happens. There's a supply. So the dollar explodes up on Friday into a supply. So now, Leroy, well, on the same note, EURUSD is also in a supply, but this is 2 days. So this is Monday, Tuesday. the bullish impulse continues. The bullish impulse continues, right, into an established supply that was there on the 9th of May, a long, long time ago. Markets used that supply to come down to this demand, but we started buying in the previous war room. Let's find price on Tuesday. Why is this important? Because Tuesday is obviously a day before CPI comes out, which I would not have known that CPI was going to come in flat. The day before Powell comes to talk, I wouldn't know what Powell is going to say, but I'm reading my charts. I know what my charts are definitely telling me. Right, so we need 2 days on EURUSD as well. This is how you back test, by the way. This is what we mean by back testing. You should have a spreadsheet open, though, a notepad or notes somewhere to write this stuff down, because you're not going to remember all of it as you back test. But this is how we built a strategy. When I built this, took me 3 years of back testing before I even launched an academy as a profitable trader, because I kept looking at what stuff means. This is how you build it. So I'm giving you a way to create your own book, your own trading book, right? So now I'm going to add, like I said, Monday, Tuesday. So that's Monday, Tuesday. Well, right now, on EURUSD, strong gap. So those retail traders who took the risk and started selling here on confirmation, if they were lucky, they made money. They most likely didn't, because price gapped at midnight on the opening of the markets. Most of us were sleeping because of the Euro drama. There's something with the French president losing votes, getting 15%, far right getting 30%. In South Africa, the far right are things like Action SA, Gayton McKenzie, xenophobes, nationalists, just far right politics that devalues humanity. That's what I mean by far right, right? So Europe is going through a far right phase. Far right, by the way, is literally what gives birth to people like Hitler. But yeah, whatever. The world is just messed up. So this supply creates a market gap. A market gap, guys, is a lot of pressure. Price can gap up or down, doesn't matter. Market gaps are also price inefficiencies. It happened too fast for the algorithm to print candlesticks correctly. So the algorithm knows it must come back and fill the gap one day. But the gap represents an imbalance. An imbalance is direction of flow, supply or demand, selling or buying. Half the people who started to watch this video are gone. They got bored a long time ago. If you're still watching, love yourself enough to really intake it. You're already here. So I really want you to understand it, but do yourself a favor and put the phone down. Don't get too distracted, because it's going to happen many times in your trading life. But I'm not going to always be there to explain it, right? But I appreciate you. Shake my hand. If you shake my hand now, I'm asking you in the comments, just let me know you're still here, because this is so important. Now, when the gap happens, look at what the gap does. The imbalance, the sell pressure, because of the Euro stuff, because of NFP, because of this combination of sentiment, fundamentals, and value. There was always a supply at play. The original supply is the sell pressure. It's pushing down order flows to sell. We're already dumping 3, 4, 5 days before NFP. Hey. Then they're gonna say I didn't try. I'm not your average mentor, bro. I really don't even think I'm a mentor. I just like to teach the stuff. So I really hope you're learning. Right. So markets explode down, take out 1, 2 demands. Whoa. When you break a demand at 365, it gives us direction about your plan. But we already know. Because we can see. We can see there's a supply. On EURUSD, you make contact with the supply. On DXY, so this is before CPI. Right. And then I say on Wednesday now, in the public Telegram group, hope the screen grab is up there somewhere. I say, look, guys, I personally would love to keep selling EURUSD, but it's currently oversold. Right? Oversold. Whenever an asset is oversold, we expect it to come back up. This big reaction, oversold. Whenever you're oversold, we expect markets to fix things, right? It's a leg. There are indicators for oversold, overbought, but I don't trust them. I trust my eyes. I trust my market understanding. I don't trust any type of indicators, generally speaking, right? So I say, look, man, it's oversold. And so, because of this understanding, this is at 2:15, 15 minutes before CPI. So now I'm creating a story, a narrative. I'm trying to explain my trading bias to the people who are reading these messages, who care about 365. I'm like, listen, this is how you should think about price. Look at price. This is oversold. This is interesting. But we've got CPI in the next 15 minutes. You have to play the scenarios. If CPI is positive, if inflation is hot, what does this mean for the dollar, for the euro? If it's not, what does it mean? And where is price now? This is where price was. And I'm on the daily, so we can go to smaller time frames, but I'm going to stick to the daily. So I say because it's oversold, meaning this would be a perfect time for markets to create a retracement. Because it's oversold, you need to create a retracement. And because you're about to get data, what would the data be leaning towards? If I wanted a retracement on Euro USD that's oversold, look at DXY. DXY is balanced, right? It's in a range. Number one, the demand is not broken. The supply is not broken. No one is necessarily overbuying or overselling. It's compact, it's nice and neat. It's tennis. The demand hits the ball, which is price. Supply, it hits the ball back to the demand. It's nice and balanced. Euro USD, no. It's oversold. So then I say, well, what if we're getting CPI and I want Euro USD to retrace? What's the obvious thing that I would need from data? I would need inflation to come in cool so that the dollar can cool off, stop being strong, and allow the euro to be strong so it stops being oversold. So I need the euro to go up to retrace. That's what I say. It's right there in front of you, I hope, in the screen graph. Right, so perfect time create retracement. For that to work, euro has to gain strength over the dollar, meaning potentially CPI comes in as expected. Right, so expected would be, we expect 0.2 and it comes in at 0.2. It actually did even better than expected, came in even lower. So that there is no dollar rally, no dollar strength, right? And the dollar is already sitting at a supply the day before, right? DXY daily supply holds. I say that this supply holds right there. And euro uses the news to push up to the fresh euro USD supply. That's how you do this stuff. Nice and slow. Right, so I'm just mapping out a scenario on probability. Lo and behold, Wednesday CPI data comes in as expected. Boom, look at that. Explosion, as if they didn't just take out a demand. They explode up straight into, and let me zoom in for you so you can see how close it was. Right, and the reason why price didn't make contact there is called area of competition, right? Like everyone was just on it. The good traders, professional traders are on it. And maybe if you use Hakani Hashi, I'll do that later, right? Maybe we could have gotten something there. Maybe I'd gone a little bit lower. I didn't. I liked my zone. I priced in my zone. But markets did do exactly what I was saying it was going to do. And then CPI comes in and the numbers are low, blah, 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 blah. And then we move into the next thing, right? Then I take pictures and post it into the group. So this is how the dollar reacts to CPI. Remember, I said we don't want to see a dollar rally. Boom. Full reaction into that supply that was triggered on the day before, and price just dropped. So the green candle going up on Euro USD is the red candle going down. But now careful, because it's all happening on the same day. But markets prep themselves. The gurus really worked it out. Look at the buying power used on NFP. Markets fall into a demand. Euro USD, they broke demands. This week here takes it out. They quickly turn an original turn without us, spoken about in module 1, right? Because of the sell pressure, area of competition, Powell comes to start talking, etc., etc. So I share this stuff in the group and I say just before FOMC, markets use CPI data to use the valid zones, but rush to violate the rush volatility is at play. DXY sent down to a new demand, boom, like that, right? And Euro USD close to a fresh supply, bam, like that. Now, what do we know about FOMC's mindset, right? So this is where I'm saying, right? This is the second low inflation report, because remember, we now have the report in front of us. Second left low. The first report that Powell wanted was NFP, which was the first one was more than expected. And now, no, it was a miss. And the second NFP, the one that created this demand, right, came in very hot, right, hot NFP. Then I said, I wouldn't be surprised if Powell comes in dovish. I genuinely believe that. He didn't. He came in neutral to hawkish. That's what I said. When we dovish, we risk on big time, and we need a weak dollar. We need a weak dollar for that. That's what I said. All right. When we dovish, we need a weak dollar for that. So watch the rate decision at 8 p.m. and Powell at 8:30. I won't be able to do that. And lo and behold, the weak dollar came, but supply and demand overrode it, right? Demand made in contact. This is where we are today. Price bounces back because, again, why? Don't forget, Powell did not come in dovish. He came in neutral to hawkish. Hawkish means risk assets are going to take a slight beating and the dollar is going to continue. Supply works to set up traders to fail for the news event. Supply taken out now because of Powell's stance. Powell's stance supported by demand that was put in a day before. EURUSD continues on the same pathway. You break in because this demand is broken. Using the fresh sell, price moves down. And originally I said I want a scenario where we continue to sell EURUSD. Man, if that doesn't like move you, because it drives me crazy. I've been doing this for almost 12 years and I can never ever get over the accuracy of supply and demand. I can never get over how excited it is, to really, I've messed up my slide. This is an H4 trend line. This is what I'm looking at, by the way. If you wake up Monday, Tuesday, and you've watched this video already, this is an area to look out for continued selling downside. There were good 5-minute demands down here across all risky assets for short-term buys, if you like those small zones, higher risk, etc. But yeah, what a perfect ending, right? I know I took a lot of time on EURUSD, but I really hope that helped you. So please do let me know in the comments if it did. And yeah, one more time, shake my hand, right? So where are we? And how did we get here? We got here because we're talking about the dollar, right? So the dollar is taking out a supply, right? It's as simple as that. And now, because we do have a hawkish FOMC, neutral to hawkish, but the dollar has been in a trend, right? So we're not stupid. We're not yet there where we can start to be very excited about that, right? EURUSD seems to want to continue to keep falling down a little bit, maybe until it makes contact with this old weekly demand. Maybe then we'll start to see some reversals. I don't know. But right now, I have no big plays on the dollar because right now, none of my zones are there. Like we're too far away from a daily demand. We've broken a weekly supply, right? We've closed above it. And if that happens, then, we're really open to challenging, slightly higher levels. It's all going to be about the sentiment, the fundamentals. And like I said this week, look out for those two short dollar, news sparks to see if they spark, higher move to the upside, right? Armed with this information, then we can start to look at things like USDJPY. I thought I was going to have a chance to look at what Alvin put up on our private group. I didn't have a chance yet. But I wouldn't be surprised if you look at the CFTC data on USDJPY. I'm pretty sure you'd see that the banks have not been focused on their shorts for a very long time, but they are taking profits on longs. And the way to see that on CFTC is to have that I taught on this. I said you must always have a number where you have 13 weeks of average. So you have a 13-week mean. So the last 13 weeks, if you add all the longs together and divide by 13, you kind of get a sense of what their maximum and minimum is in terms of buy pressure or sell pressure. And when any of the orders, the weekly CFTC numbers get close to that average, you will know that, okay, they're now very close to how high they can buy before they start offloading. And I think we're very close to that. So I wouldn't be surprised if we see a little bit of USDJPY sell side pressure. This is not something that's going to happen overnight or in the next day or so, right? I'm pretty sure this is going to be, and we did map out this buy area in the previous war room. So I do expect maybe if we make contact with the supply where there might be more short spin offloaded, right? So look out for that. We should assume a little bit of strength for the dollar for a while, but it's very tricky, right? So just be mindful of that, right? USDJPY, I expect banks to take profits on longs, and they might want to use this area to drive them into a supply so that they've got a very good excuse of doing that. And then if they do that, Next week, we can then start to map out the retracement zone. And then if this successfully, if price closes above this red line, please move your stop loss to break even, just in case markets come back, right? So you don't have to take an L or take profit, whatever. But this is not like the best trade in place, right? Buying this close to a supply is never, advisable. So it's never going to be a 1:3. But we spoke about this in a previous war room. So I'll move on. USD Swiss franc. All right, CFTC longs have been extremely interesting. If you look at the governing time frame, or in a bigger perspective, they were very aggressive. And now we're in that 2 months retracement zone. Markets carefully not creating a bearish engulfing pattern, right? They look at that, very careful about that stuff, right? So they don't want aggressive sell pressure in play. Right. So, maybe this is the chart to look out for some reversals. In fact, I think this week is also a big week for Swiss franc. I think there are a couple of things happening. You can see on our golden ratio, where we already have an area marked where we're waiting for price. I'm going to delete that, and we're going to move to the weekly time frame to see what's cooking. Right. We've got a weekly supply in play as price sinks into daily demands. Right. There's a nice demand there behind a downward trend line. And on the daily time frame, this is what we're looking at, right? So, I would also, be very worrisome of a potential drop. You can see there's a lot of pressure from the weekly to the daily. If this demand holds, that would be beautiful. I have already explained this demand to you guys and this demand in previous war rooms. And I explained why I would like to wait for price down here. I've explained that yes, it's very possible. Anything is possible. It's possible that price could explode there, but I think this needs to be removed and price either, does a technical bounce or comes to where I want it to come to, right? So that's, I apologize for that. That's at play right now, all right, on USD Swiss franc, right? USD CAD, next one. Right. Check CFT, the data. You'll see these guys are also very close to maxing out their longs. Very close to matching max longs. Max longs means this is the most they normally buy. When they get to a number where it's very close, so if you pile that up, I'll look at Alvin's thing. My spreadsheet is behind, and I need to fix that. That's very bad of me, but I think it's bad of you guys who don't have it, because if you don't have it, you really can't see what these institutions are doing, right? But this is a swing that we've been holding. I would close this, right? I mean, if price was to start to fall while you're in it, it would be a painful look, because remember, there is a daily supply. Look at this. So maybe actually markets open tomorrow, Monday. I think it's time to close USD CAD. I know my take profit was slightly above, but I'm happy to close. I'm just going to quickly make a note of this just to execute on my phone when markets open, right? Because I think it's done its part, right? So either this supply breaks and we move forward, but even if we move forward, moving into a bigger supply. So it's time to step out of this market and just kind of like let's see what happens, right? USDZAR. I think I mapped this out, but I don't think I ever took the trade. I'm not in any exotic pairs. So, USDZAR is an exotic pair. I'm not in this. Sometimes I just do analysis in bed, and then I tell myself I'm going to wake up and sort this out and put in my pending orders. And, I forget. And that's sad, because this is perfect analysis and it's played out. But that's okay. That's okay. Right. So let's go to the governing time frame and catch up with USDZAR. Nasty range. This is why I remember now why I stopped trading this. I hate ranges. Oh my goodness. Oh my goodness. This is from last year, June. Up until now, market's a bit indecisive. Bullish engulfing pattern, bearish engulfing pattern. Just a crazy range. A range that is somewhat slightly leaning to the downside, but you could get your asymmetric triangles. Those of you guys who are like those technical what's, this is how you like to trade, so be it. So you've got a pocket to work with here. I wouldn't call this a bullish flag, but there's something going on here. And then there's a demand from February 2023 that's kind of like holding this up, right? So markets were to break down here, which is so unlikely, I don't know. I don't know if ZAR is gaining any strength from this drama of national governments and coalitions. But this pathway to the downside, I find it extremely unlikely. I mean, the last time we were all the way here was 2021. South African economy, as we know, is a bit weak right now. So all things being equal with the dollar bull run, this is something we can expect more. So right, and it's going to happen at a nice and very slow pace because USDZAR does that. Exotic pairs do move up and down, but they move at a gentle pace. So look at this massive consolidation to the upside. We hope that it will break that way. On the weekly time frame, for clarity, Friday close with another some strong sell pressure. I'm going to start. Let me borrow this area of value here, right? So in the weekly time frame, we've got a strong demand at play. Maybe we even get a fake out to the demand and then price goes up. Who knows, right? So we've got this contacting area of competition, as you can see there. Very big zone on the weekly. And then on the daily, we've got something like this. So bullish engulfing sitting on a break. I don't mind. I'm happy to take a trade here. I really am. I mean, win or lose, I'm happy to take a trade there and see what happens on a daily. It's got tiny, slight confluence with the weekly area of value, but I'm very happy. I'm happy to do that. I'm happy to take a trade in that area, and then we see how that goes, right? Don't forget this fresh supply there. I'm hoping this will be ignored by the markets, right? So that's a potential situation, right? I don't know what's going on here, but this drop by could work out. USDZAR. The next asset is EURUSD, and I think we come on. We really I've really banged the drum on this particular chart. CFTC shows that EURUSD, they're still adding longs, but you'll notice that zones are not holding on EURUSD. I don't know if you guys have picked that up. Markets are equalized, right? They'll take out a demand taken out, demand taken out. They'll take out a supply. This supply was taken out here, daily demands were taken out, so prices dwindling down right now. Other side of this trend line. Remember, I just want to be in EURUSD parity, which will come from EURUSD monetary policy divergency, where the dollar is very strong and the euro falls all the way to 1.0. That's a swing I'm hoping to have in my bag. Really call it early, hold it all the way till the end of the year until the elections. If not next year, who knows? Who knows if it's already started, right? It's all about monetary policy divergence. So we'll see what power does in the next few weeks to come. So EURUSD, I've already touched on that. I'm sure we can move on. The next asset is the pound USD. Oh, that's interesting. I already see a broken daily supply. I wonder what happened there. Right. Okay. So on the governing time frame, markets are bouncing off somewhat of a demand. I can't really see a clean supply until we get all the way up there. On the weekly time frame, yeah, but this doesn't have a good imbalance, right? Remember in module 1, we talk about imbalances and their importance on the daily time frame. All right, so this is what was broken. Right? And then markets kind of like moved all the way down. And there's probably an H4 demand, which I don't really, see markets are a bit overextended. Oh, it's nothing. It's just a zone that I have there. Interesting. Oh, okay. It's a fair value gap because of this zone here that was broken. I forgot I marked this up. So yeah, previous high was marked up, massive imbalance, fair value gap. So we do anticipate that markets could stop there, maybe, right? Let's grow Fibonacci. Yeah, because anti-Fib wants us here, right? See, 50% golden ratio. This is a good area. But to be honest, I'm not going to take a trade on pound USD because I'm already exposed in EURUSD. So I'll wait to see how markets play that off. But for those of you who are, short callers, cowboys, hustlers, you're really looking at this area of value here. That's what you're looking at, right? So just be mindful of that, all right? AUD USD up next. This is so annoying. Go away, go away, go away, go away. Can't see what I'm doing. Right, there we go. Right, we spoke about this in the previous forum. I said this demand, I'm marking it in gray. I don't like it. The order block and the area of value has been tapped way too many times, class effect, right? And then we spoke about how broken this whole thing was. That shouldn't even be in there, right? So broken supply. This is a supply. This was what's broken, right? So this is really the area that's trying to put down pressure. And this is the area in our last war room that I said price is going to come here and be prepared to drop. And you can see markets did come in there. And then for the last 2 days, Thursday and Friday, markets are dropping back down. I do believe this area is going to be removed, personally. I think so. On the governing time frame of AUD USD, I'd say we've got a lot of sell pressure. Right, I'd say this is a very big deal, and it's been holding price for a long time. Yes, we've got a bullish engulfing pattern finally, but we've got another bearish one, right? So it's almost like price bought into a sell zone and markets might push it back down, right? But, it'd be nice to see AUD go up. Let's go to the presidential charts, more unclear. Just a long-term consolidation, right? Most markets are just trading sideways. Like I said earlier on in this video, I said we need to wait for monetary policy divergence because that's what makes markets trend. Like long trends, for a swing trader, we get them from that, right? So that's AUD USD. Next on the list is silver. Oh, still, nope, not even interested. Remember I said we're not going to trade until it gets out of this zone. So yeah, gonna go to gold. I prefer gold more. Gold, like I said, Cowboys don't. I told you guys, look at this. NFP, look at gold. Looks like Euro USD, right? So when the NFP came positive, flows went to the dollar. Gold created the same incredible big bearish engulfing candle like Euro USD on the daily, right? So if you know your markets and correlations, it just becomes simple, right? And then glass effect, I told you guys that I don't want to buy here. And I said, look, man, what's the risk reward ratio, right? We really want gold to come down personally, but I need this area to be removed. This whole red zone must go and it tries to break through it. And now I want to sell. So maybe Euro USD won't give me a contact on that supply, but maybe gold might. I would love to sell gold over there. I'd love to try anyways. So that's my trade for gold. Sell. And then if we do sell, I'll hold and see if we can break through this area, although markets have started to repair the zone, right? So just be very careful of that. But right now, I am not gold bullish, I'm gold bearish. I am not gold bullish, I'm gold bearish, all right? There are indications, but remember, CFTC takes time, right? So banks take time, but there are indications that they're starting to build longs. But it's not like something's going to happen next week. It's like a weekly to a month to 2 months type of process. So as they are starting to build their longs, I'm hoping they push price lower, right? Because this will be very nice. So that's what I want to see from gold. Contact supply, sell. And I'm going to be more generous so I don't get left behind, right? I'm going to be very generous so I don't get left behind. That means I might have my area of value or my proximal line or my pending order somewhere here at the competition of the H4 week of gold, but it makes the zone quite expensive. So make sure you know how to calculate lot sizing and your risks, and your account can afford to take a gold trade, all right? Don't take, not all these trades, you can't take all these trades if you don't have the account for them. It just depends. It depends what kind of a trader you are. But yeah, just be mindful of that situation. Next chart, AUDCAD. So far, you got me falling on the daily. I remind myself, right? So on the governor, come on. There we go. Then one, and then finally, Right. So the governing time frame, very close to a governing supply. One would argue that it's already made contact with the governing supply. If you adjust area of values, fresh engulfing contact, and then the fall. This is how the month of June started. How on earth did we miss this? How on earth did we miss this? Those kind of swings, man. I like this type of swings. Right. Okay. So let's see. Daily time frame. We're in the choppy zone now, right? So essentially, we need to watch price swing below these areas and potentially even swing below this area and then retrace and then we join it to come all the way down here. That would be a beautiful trade. But until then, we gotta beat this and then beat that. So wanna see something like this. That would be nice on AUDCAD. Will we get that? I don't know. We missed this. We should have sold immediately so that we're just on autopilot now and not begging for crumbs. Because remember, sell high, buy low is not a joke, right? You really want to try and get in high on your swing supplies and low on your swing buys, right? So that's AUDCAD. The next one is AUDJPY. We're almost done. AUDJPY. Do nothing. I'm still on team do nothing here. Not even interested. CADJPY. Appreciate you guys for watching. Still do nothing. Very choppy. Something about this. I think yen is weak. So I expect this charts I'm showing you. I expect to push up. By the way, but I'm not seeing a clear path to enter. So I'm not going to do anything. I'm not going to force so much money to be made somewhere else. The other way to make money is to preserve capital, right? You can't trade without capital, so don't throw it away. Okay, Euro AUD. What's going on? Right, all right. Very ugly chart, man. This is a very, very ugly chart. I mean, where on earth is this chart going? Look at these wicks, man. Gotta feel this. The algorithm's gonna feel these wicks eventually, but this was a good imbalance. So technically the 6-month supply starts somewhere here, where price is right now. If I do this and I adjust a little bit, you see that there? The area of competition for this drop starts where price is roughly in the last 2 months. But let me just fix that. Take that back, right? Then straight to the governor. All right, so if you look now on the monthly time frame, if we're to ignore the long wick and draw the governing time frame properly, there you'll see markets have been just bouncing on the supply, bouncing, and finally they broke through, right? Breaking through it's not a bullish engulfing pattern, but it looked like one. A lot of buy pressure, but it's not a bullish engulfing pattern. And drop into the downside on the weekly, very similar, living a weekly supply, right? Made contact Thursday, the other week, sorry. And then on the daily, very similar, strong sell week, very, very similar, strong sell week, right? Like that. That's Euro AUD. And then the next one is Euro Pound. Oh, the one with the gap, right? This was good. Well, I'm not in it anymore. I got out just before Tuesday or something, just to consolidate my stats. But yeah, it had the same gap, that Euro gap, French president, blah, 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 blah. Treat it like, a version of Euro USD. But let's go to the governing time frame. Because, this chart literally annoys me so much because we really should be below this white line. And I've said this many times, but maybe this is the leg. Every time I think this is the leg, markets bounce up again around that psychological area, right? But we're really itching down on the weekly time frame, same. And maybe I should not have closed this, maybe I should have kept holding. Right. To re-enter the game, it'll be nice for price to come here, to re-enter. I would like this to re-enter. This would be what I would want to see, to re-enter the sell. Price might not give me that, right? So price could continue from here opening Monday, Tuesday, down. Price could stop, fill the gap halfway, down, right? But I would prefer something that looks like this. Personally, I would prefer that first for me to get back in and then maybe really now have the balls to hold all the way down there. We'll see. Right. So this is just kind of like a rough draft for Euro Pound. I find it tricky. According to my trading journal, Euro Pound is not really my friend. I think maybe I've got a 45% win rate with Euro Pound. It's just choppy for me, for my eyes, right? So I trade it carefully when I can see. Spoke about this Pound AUD. There's nothing for me to do. And then if you're trying to get in again, then just watch out for the trend, right? But really, this was the right supply to enter. Those of you who are not in, you maybe want to wait for something like that to come back down, or you want to take a risk and wait somewhere here, which I doubt is a good idea. Let's go to H2 and just get a better look. All right. So H2 says it's worth it. Right. So maybe if you're not in with us on this bigger swing, this is what we're looking at. All right. Watch out for this. Otherwise, we are holding down. We're going down with Pound AUD. Please maintain. And then the last asset for the day, ladies and gentlemen, thank you for being patient and kind. And once again, happy Father's Day to all the fathers out there. We celebrate you, what, and stuff. Pound NZD. Right, let's go to the daily to see what we last said about it. Isn't it nice when these arrows are there and you were there in the previous forum and I told you, don't you worry, markets are going to come to this supply and start to fall. Markets came in, started to fall, right? This is what we said. And then markets come back here, right? And then markets make contact again. This supply is officially cowboy land, right? This is now cowboy zone. Why? Glass effect. So be very careful. Right, if price is to break here, those of you who are riding this with me, if price breaks below here, and it should this coming week. If it does, if it doesn't, then make a decision for yourself immediately to either close and keep the profits. But if it breaks down here, let it do whatever it wants until we get down there. If it breaks down here, I, Leroy, will let it retrace with me and then come back down. If you're scared, close. Simple. That's all it is. Right. I think for now, this is where we should end it off. Once again, don't forget the Father's Day special applies to every single human being, but it is absolutely in honor of fathers. We celebrate you dads. You guys do a lot, So if you want access to the course is officially 50% off up until the end of June using the correct link. Please use the correct link. So if you use a link that wants you to pay the full amount, $300 payment plan, $240 with the whatever discount once off. That's not the right link to use. Until the end of June, use the link. Whether you're a father or not a father, a man, a woman, a boy, a girl, he, they, she, whatever, it doesn't matter. It's for everyone. Use the link and pay only $150 to get full access to 365. Shake my hand. Thank you so much for watching. I appreciate you. If you liked it, don't forget to like. Don't forget to comment. Peace. And I will see you in the next war room, probably next week, right? And really just think through this stuff, right? Take care. Peace.